While you're reading this disclaimer, don't forget to subscribe, tap that like button, and zip up your fly. Geesh, have some class. Hey, what's up, Royal Trading family? Okay, a little corny as I usually am here, but this video is going to be super important. This is where we're going over the bit method overview to actually show you the bits and pieces. See what I did there? The bits and pieces. Each individual letter in the acronym BIT, B.I.T, is going to be explained, and you're going to see a specific example actually in this video. Before I get too deep into here, again, if you're watching this on YouTube, click the link in the description to access our free members area so you can get access to all these slides, any PDFs, guides, or checklists that I discuss in these trainings, other resources, as well as like my recommended brokers, as well as notification of free live trainings that I do where you can look over my shoulder and see me trade. So, what is the BIT method? It is a way for you to look at the market through not just one or two, but up to three lenses that give you the proper view of what the market is. Like if you've ever seen the analogy before, where if you look at a circle in this direction, people are, oh, well, it's clearly a circle. But then you turn it on its side and you're like, wait a minute, that looks like a rectangle. But then you look in 3 dimensions and it's actually like a cylinder. It depends upon what angle you're looking at this particular object. It could look like a circle, it could look like a rectangle, or in 3D view, it could look like a cylinder. So it's very important to have a 3-dimensional view when you're looking at the markets. What dimensions am I looking at? These 3 things. B is for blocks, as in order blocks. I is for my indicator, and T is trends. So order blocks, again, this has already been covered in a few videos, but just a quick review. 97% of retail traders lose money. Instead, we trade with the institutions. These are the banks, these are the hedge funds, and we keep exactly where they're placing their orders in either direction in mind when we're trading. Again, I'd rather swim with the stream rather than against it. Indicators. This is proprietary premium indicators that allow you to get an edge. They're going to help you know which type of trade, whether it's long or short, a buy or a sell you should be looking for, and when that buy or sell momentum has changed in the other direction. And then finally, the trends. And again, another lens to look at your trades through. Using trends allows you to swim with the stream instead of against it. Now, how is trends different than doing order blocks or indicators? It's a different confluence. It's a different way to look at trends. The order blocks will give you a sense of when pricing will stop moving up or stop going down and reverse in either direction. Indicators talk about momentum, maybe on the micro level in some cases. Trends, well, both trends and indicators, I can look at the micro and the macro level. I can zoom in or I can zoom out, depending upon if I'm a day trader, I'm looking at it minute by minute, or if I'm a swing trader where I'm like, I don't want to look at the markets for any long periods of time. I might do all my research on a Sunday night, place my trades before I even go to bed, and then wake up in the morning and keep my fingers crossed that I made the right decision and all that. Again, we don't like to keep our fingers crossed. We don't want to be gambling here, but the whole point here of the BIT method is to use all 3 of these confluences, make sure they're happening at the same time. Now, other than trying to go into some more slides, wouldn't it be better if I just showed you an example? So let's get into it. All right, here I am on the charts. I'm right now on the NASDAQ. So this is the E-mini NASDAQ futures. I've already kind of drawn in some things here, and you can also see a few different things here. And actually, let me do this. Hold on a second. Yeah, too many colors going around. All the stripes in the background. That just shows the different sessions. So I just got rid of that. That's just showing when the different trading sessions are, whether it's overseas or in New York's trading session domestically. Yeah, don't have to go into that for the sake of this training. With that being said, if you know what, I'll just start over here. So like, all right, so right here we are looking at the NASDAQ. As you can see, we have our candles going up and down, and I'm zoomed out pretty decently here for a 15-minute, but there's a lot of other things going on. We've got all these little diamond shapes here. We've got these green and red clouds. We've got a red and yellow box and another red box and a tiny yellow box inside a red box, and then we've got this purple line. These are all different things where I'm looking at this pricing in different lenses. And I'm going to explain each of these 3 things in order, B-I-T, on the BIT method, and show you why I use that to make a particular trade, let's say in this case. So the first thing is order blocks. So as you can see here, there's a red one here, a red one here, a yellow, and a yellow. These are areas where you can see price reverse. Now, why is this block drawn here and it doesn't go up to as high as here? Why is the block red? Why is the block dashed white lines? Where do I draw the block from the bottom to the top, right? There's a lot of questions you might have. It's not meant for this training. All you need to do, even if you just eyeballed this and kind of had a sense, you'd at least have an idea of, okay, well, this is the top of that. Now, the reason why I've got red and yellow is the red is a 4-hour order block, which, you know, the bigger the time frame, the more weight it carries. So again, the bigger the time frame, the bigger the importance of that trend or that order block. Okay, so the red ones that are here are 4-hour. The yellow ones are 15-minute order blocks, and then I'm looking to trade typically on the 1 minute. I might even go down to the 5 or 15 second if I'm trading at the open. You know, like, again, I'm a little crazy as far as that goes. So as you can see here, these were specific areas, yellow and red, where the price is either, let me actually go zoom back out here so you can see. This is where the price hit a ceiling, tapped out, and then fell, right? Or in this case, after it fell, it created a new order block because it probably hit an order block back here and then hit a floor. So again, we hit the ceiling. It's the price, as you can see here, has gone down. It's now hit a floor, and it's starting to bounce back up. You know, basketball bounced on the floor. Is it going to continuously lose air, lose a bounce and then drop further, or is it going to go up? Who knows, right? We'll see. So here's the question. So hopefully that makes sense. What these order blocks are. Again, these are areas where the price has trailed off, and again, mostly in the downward direction. This is a floor where the price actually bounced up from. Okay, and what you'll see is when I say like prices in a range or consolidation, something along those lines, it's bouncing between these order blocks. It's staying within a range between order blocks, and we don't know which direction it's going, kind of a thing, right? So now, the next one is I. So on this time frame, you can see here that this green cloud means that I should have been looking for buys, and this red cloud here, and especially here, I should have been looking for sells. So the cloud is telling me which direction the momentum is going in, and we can see the momentum change at the different points of these diamonds, right? So right here, again, could have been looking for sells here. Could have potentially tried to ride this down to here, but I don't generally look at diamonds on this. It's set to 1 minute right now. I wouldn't be looking at a 15-minute chart to trade on the 1 minute. I'd be looking at the diamonds on the 1 minute in relation to the 1 minute cloud. But I like looking at the 15-minute or 1 hour, 1 hour cloud, the bigger cloud, whatever. Again, you can change the time frames that these clouds appear in, by the way, on the indicator. But long story short, this is kind of like a macro. The zoomed out, the bigger trend that I want to be looking at in green. And then if I go down to the 1 minute, kind of zoom back to that same area way back here. There we go. Here's the green. All right. I had all this time. So right here is like 9 a.m. This is the open. Right here at 9:30. Price started to kind of test up, tested way back down, tested way back up. And at 1, the pricing kind of beat the high right here and continued up. Because I was not yet, I wasn't yet in a green, bigger cloud, I may or may not have been agreeing. It would have still been a risky buy if I bought here because the bigger cloud was still red. But, as you can see, this smaller cloud right here was green. So it could have been risky if I tried to get in the trade here, but I could have done a trade here. Do a 100 tick stop right here. Would have gotten the trade right about here. Again, for reasons that I go into deeper in terms of the training. But this one, again, would have been moving my stop loss to here, to probably this level, here. I probably would be getting out too close to the end of the day, somewhere in here. As you can see, it got a little more volatile. I might have already moved my stop loss here and gotten this stopped out. But even if I just held this trade till the end of the day, somewhere in this mess, you can see the risk-reward ratio is 7.56. So that means if this length of the stop loss here is 1, the length from the entry right here to the top is 7.56, which means that if I was risking in the stop loss from the entry to the bottom here $100, this would have made me $756. If I was risking $1,000 from here to here, this would have made me $7,560. Again, there's commissions and fees and other things, but that's a pretty darn good trade, right? Again, just following the indicator. Now, keep this in mind. If you're going to just trade using one I don't want to say confluence. A confluence is a merger between two things. One strategy, I guess. If you're using just the indicator, cool. You can trade that, and you can go for 1 to 3 risk-reward ratios all day long. You can step up to the plate, swing the bat, do 3 trades, a day. Commit to up to 3 trades a day. If you win the first one, you can be done and walk away. You got a 1 to 3. You made $300, maybe $3,000. You're done for the day, right? If you break even, lose one, well, guess what? Maybe that was your 3 trades for the day, and you're done. If if the market's going against you, and it's difficult, right? Again, I can go in a whole video training on risk-reward ratios, but I'm not. So anyways, again, indicator-wise, you can see here there's a 4-hour order block that got created here at the top because a lot of sell volume came right here, started to test back up to the top of the order block, the price didn't even quite make it back to the order block and started coming down. So I could have easily gotten in a sell somewhere in here. And don't worry about stop levels and stuff like that. But let's just say somewhere in here. And could have ridden this down to, let's say, probably here before I got maybe stopped out on the way back up. That's another 1 to 7. Plus 7 risk-reward ratio on that one. So could have made a bunch of money there. So again, there's a lot of different ways to get entries when you're looking for sells. And the entry, by the way, with the indicator is you wait for price to test back up, and then on the test back down, in this case, this looks right here, this looks like, this is the close of the market, or there's financial news. If you know there's financial news happening, I say this in a lot of videos, don't be in the markets during financial news. Okay? So here, if we fast forward, here's the beginning of the next trading day, right? Price came up, and then it broke all these lows and then shot down, right? So rate, if I didn't catch this trade on the way down, just looking at my indicator, price shot down, started to test back up, didn't even quite touch our indicator, would have wanted to get in as soon as it started to break that low right there. That's an entry. I can go 1 to 3 out of the trade. That trade I would have been in from 944 to 950, something like that. So a 5-minute trade made $5,000 on it. I'm sorry, $3,000 on it. Right. Next thing is this again. It tested back up right here. Didn't go above this high. As soon as we crossed, this is I call this the royal bloodline. This is basically it's got a couple things in it, but you could just consider it like a moving average kind of a line. The momentum may have been back up, but it didn't break this high, this wick right here. And as soon as it shot back down, this would have been another entry right here, right as soon as it solidly crosses that line, and then again going for another 1 to 3, and I'm out. This trade would be 1026 to 1048, so 22 minutes, give or take, another $3,000 made, right? Now, but this is, again, you got to pay attention to the markets. You got to be willing to stare at the chart for that, for the 30 minutes or, or whatever in between trades, or an hour between trades sometimes, if you want to go that crazy, right? If you do this on bigger time frames, guess what? You don't have to trade as much. I like getting up to the plate and swinging the bat. So hopefully that's made some sense in terms of, again, I'm looking at the cloud colors. I'm looking at the King of Diamond colors here. Again, diamonds aren't always red in the case of trading. Sometimes they're green, right? But you want to keep this in mind as you're doing your trading and making sure that you are looking at or looking through the indicator lens as well. And then finally, if I go back and zoom back out, we're going to do T for trend. So again, like the indicators do look at trends. Again, this is obviously trending down. We have a red cloud. At the same time, I look for channels as well. And especially highs or lows or intersections between them and everything. I want to kind of, again, look through a lens of like, well, it looks like the algorithms are looking at these prices and they're not willing to go above these certain prices. You know, like there's technically a trend here when it was going low like this, and it broke out of the trend here. Might have tried to get in a buy right here. Would have gotten stopped out for either a loss or break even. Maybe get a 1-to-1 risk reward ratio out of that. But, you know, that's another way to look at that. Or see if I can actually grab this without screwing up my other stuff. What about something like this? I could see that this crossed above that trend line. It tested back down where this order block was, and as soon as it shot back up, I would have tried to get into a buy here. So that could have been a nice easy 1-to-3, 1-to-5, something along those lines, right? So again, let's ignore that, and this is the original trend I was looking at. Now, is this a perfect one? No, because the price didn't even come up and touch here, right? But this high, which was again an order block, it's important. And this technically, I can draw all the way back to here. So it touches here, didn't quite touch here, didn't quite touch here. But I'm just keeping this in mind that I'm like, you know what? Price has to get above here for me to look for a buy, right? But here's the thing. Yeah, so again, like, this is a trend. Could I have waited for it to come close and tap here and then did a sell on the way down? Could I have waited for this tap, waited for a solid red in the downward direction here? 100 ticks on NASDAQ here. And this is a 15-minute chart. So hold on, let me go back to the 1 minute. I'll be looking at the 1 minute here. So again, I would have seen it come up. It taps the line. We get it to come down, break this low right here in the trade here. What could we have actually run this to? I would have basically said that's my entry off of this trend line, right? And then get out as soon as it hits the order block. That's a plus 4.45. That's another 400 or 4K, again, depending upon your risk rewards. Now, can I be wrong? Absolutely. But when you're risking at least a 1-to-3, if you win 1 and 3 and the other two are at least a break even or maybe a loss, you should be back to break even at 3 trades a day, okay? Take the swing 3 times. You get 3 bad ones and you strike out, one in there. Hey, not a big deal. Right, especially on bigger stop losses, you might be able to get out at a minus 0.5 instead of a -1. So you don't fully lose a trade. It's a nice thing. Is like that's like the equivalent of like, oh, maybe I can get 5 strikes before I strike out in baseball. That would be nice, right? That's the kind of beauty that we have here with being a little flexible with our stop losses. But I'm getting ahead of myself here. So again, so that was one particular trade I could do, looking at the top of the trend here. Knowing that, it dropped off of that. So again, trend, right? And then the other thing is my order block. I think it's going to come back down and then retest this order block. And it did. And it did not blow past it. So the order block that was created way back here is still holding strong because this price didn't drop below it, right? Came back up. This price didn't drop below it. Came back up, but we're still coming down. So now let's zoom out one more time, because I want to show you where some magic happens. Magic happens when we have an order block, an indicator, and a trend line all give us a thumbs up, good to go, get in the trade. So let me show you exactly what I mean by that. Let me just delete some stuff here. So we're now at the point where we've come back down. We've tested this trend line again. And it came back down. But here's the thing. What's starting to happen here with this trend? We're starting to see this trend happen. And I'll just make this a different color for the heck of it here. So yellow. Because we're in the 15-minute block. 15-minute for yellow. We're going to stay consistent here. So now we're starting to see another trend. Interesting, right? I could draw trends all day and be like, well, this was a downward trend. Yeah, but it broke it here. I might have been looking for a buy already back here. Again, because we hit the order block. It not only hit the order block, it came back up, We beat this high right here, came back down, might have been already in a buy right here, potentially, right? I wouldn't, because acting against us is this purple trend line, right? So here's what I'm looking for. I'm looking for the intersection of all these different confluences, especially the order blocks and these trends. We've got an order block now at war against a trend line. Why? Because the order block is a flat level and the trend line is coming down like a crashing plane or something like that. Like, okay, is the plane going to pull up and the price is going to take off, or is this going to be a missile that goes right through the ground and the price continues to crash lower? Right? Is this solid ground, or is this a piece of paper? We don't know. So what we're gonna do here is just pretend like we're right at the open here. So again, this is 9 a.m. The open is right here at 9:30. This vertical line right here. So we got time on the bottom, the price is on the right axis. Let's see if it holds to this purple trend line or the yellow trend line. Right now, we've already beat the purple. We're with yellow. Beat the purple. Let's see if it's with yellow. So I'm just going to kind of fast forward here a little bit. We've come back down a lot. So we've beat the yellow, but are we going to beat this low? More importantly, are we going to beat this low? More importantly, are we going to beat this low? Because all this, even if I had tried to get into a trade here, knowing that the yellow has dropped, again, this is we're on the 1 minute time frame here. This is technically pre-market. I don't like to do anything in pre-market, by the way. Not typically, at least. But as soon as this broke that yellow, that would have broke the yellow and then broke this low. This might have been a good potential opportunity to get in here, right? Potentially. But seeing already that we've got a wicking green, so it's wicking at the bottom, this could shoot right back up and just take us out. I might actually have moved my... we're 1 minute later after getting in. I might have already moved my stop loss to around break even. Because if this doesn't shoot down, could be shooting back up. Yep, so I just got out, break even, didn't make anything, didn't lose anything. I'm out right there, right? Because look, so again, it might have beaten the yellow, but we didn't get lower than this yet. So again, we don't know which direction we're going, but let's see. Let's see what happens. We're getting close to the open, Again, 9:30 is right here. This is generally what I'm doing is I'm looking. I've got my my buy and my sell visually ready for me here. And again, let me just set this to like a 1 to 3-ish, so you guys kind of get an idea here. Now 1 to 3 is great when you're using just the indicator. When you're using trends and order blocks, you don't necessarily know right off the bat. You will have an idea in a second. You might have an idea right off the bat about where a trade is going to lead us, where it's going to potentially reverse on us. So now at this point, boom, we just saw one huge candle up. Not only did that candle go up, it went past our highs right here. So at this point, again, regardless if it's kosher or not, I might just be trying to get in a trade. I might get stopped out, whatever. It would have been nice to have gotten it in it here as soon as I saw it shoot up and go above not only the purple, but above these highs. I would have wanted to try and get in it. It's really tough to get in. It's really tough to get in a trade on the 1 minute, especially at the open. I should have been back at the 15-second, but whatever. For the sake of argument, let's just pretend I got in a trade. Still looking good. Still looking good. Now at this point, again, I have a 1 to 3 right here is what I'm aiming for, right? It just wicked our bloodline, the royal bloodline, right here. So I'm still looking at my indicator. And it has not gone below this low. It hasn't even come back to our stop loss. And with my rules, we already hit a 1-to-1 right here. So I'd be setting my stop loss to break even. Now I can't do that with this green and red area. So I'm just going to use this right here as my imaginary stop loss. And maybe I'll call this, I'll make this blue as my stop loss just for the heck of it. So you guys kind of know what I'm looking at here in terms of the difference between trend lines. So now, at this point, did we already hit a 1 to 3? Close enough, yeah, give or take. So we're at a 1 to 3. So now, if I was just trading off the indicator, let's say, and I had gotten a 1 to 3, I'd be out. here's the amazing benefit of not only knowing what order blocks are and what they do and what typically happens at them, and knowing exactly where to draw them. This gives you a very good idea on where price is headed. So right now, I'm in this trade. My stop loss is set to break even, which means that even if the price comes back down, it's virtually a risk-free trade. So now, if I'm not out at a 3-to-1, what could I do? I could set my take profit right at this. What I like to do is just a few extra ticks, a little bit below this line. So I could set a take profit there, right? So let's just make, well, we're going to make two scenarios here. One assumption is that I set my take profit right at the top of this line right here. Again, my stop loss is still down here. My take profit is here. And I walked away from the computer. So that's one scenario. The next scenario is I'm kind of watching it, but I'm also kind of chewing on my protein cookie. Here, I'm going to go on my other monitor and do some work. You know, whatever. I'm going to just keep looking on over at this. All right. Okay, it's still looking good. All right, let me just fast forward here a second. All right, still going in my direction. Okay, back to work. Right, fast forward a little bit more. Oh, cool. We had a big pullback right here. Okay, this is interesting. Now I might actually, pause on the work for a second and see, okay, which direction is this going in? I'm going to move my stop loss below this pullback, just in case. So again, I'm not at a 7 risk reward anymore, or I'm not break even from my stop loss. Right now, even if I got stopped out, my risk reward ratio, my stop loss is at 2.42. So that means if I'm risking $100, I got a guaranteed $240. If I'm risking $1,000, I got a guaranteed about $2,400. No matter what happens, right? I still want to get this 7.8-ish in here. So let's see what happens. Uh-oh, not looking good. So at this point, again, purely based upon your own trading style, right? I'm seeing a new low here from here. I'm seeing a new low from here, from here down to here. I might just get out of this trade right here and just call it a day, walk away from the computer. I made $4,000. Cool, right? Again, but if you're patient and you know you've already made your goal for the day of 200 or $2,000 or whatever it is, it's really up to you. Are you a little more greedy? Yeah, not the best thing. You don't want to be too greedy. A win in the markets is a good thing. But let's just keep this going and see what happens here. Boom. I would have gotten stopped out right here if I had come back and moved my stop loss, right? So we'll call it $2,000. But just for the heck of it, again, I said we're going to do another couple of scenarios here. What if I just set my stop loss to break even? So it's either break even or $7,000. Basically. Oh, still going. Still going. Did we reach it yet? Now, if we had tapped this a few times and I was watching, probably would have gotten out about here. And that would have been a +7. Oh, well, right? Let's see if this actually makes it back all the way up to the order block, or if we're going to come back down to our 0 break even. That would kind of stink. Like seeing it come up to like $6,000, but you walked away from the computer the entire time, right? Come on, baby. There we go. Oh, no, there it is. There it is. There it is. So we came back up. We're a little bit below the order block, but remember, I had set this for, like 7.8-ish? A little bit below the order block. Oh, my God. It's like almost exact right there. So again, this is right at the end of the day. Got us out there. Watch it just tank, whatever. So I know I'm half an hour into this training, but I want to show you one more quick thing. Hopefully you guys got a lot out of this. Like and subscribe. Make sure if you're on YouTube. So again, we definitely came up. We definitely hit the order block. We started to see it reverse. It's testing the order block again, right? But this would have been a $700 or $7,000, almost $8,000 trade. If I had done the order block, a little over 8K. Not bad. But now, we're just going to set this to the 5-minute timer real quick. Because I want you to see exactly what happens here. Because remember, we've got a 4-hour order block here. So now if this bounces off of here, what are we looking at now? This trend is done. We broke it, and then it shot up. And now we're looking at a new trend. What's that new trend? Well, after this big move here, we have a new trend of this. Is our price going to drop below here? If so, you know what I'm going to do? I'm going to ride this trade all the way back down, maybe to the order block. If not, if it's going to retest this trend line again, the opposite side of the trend line, right? So let's just see what happens. Are we going to continue up? Looks like it. Oh, heck yeah. Get back in. You know, so if I had gotten out of this trade, I might have been kicking myself going, oh, man. You know, you make $8 grand in a day, and you're like, man, I could have made 20. You know, whatever. Take the wins, guys. Don't ever be like woulda, shoulda, coulda. You'll drive yourself nuts, right? But let's assume, again, we tested the top of the order block, came back down, and again, looking at my indicator. Again, not just I'm looking at the order block, I'm looking at the trend going up. We bounced off of it 1, 2, 3 times. After we beat the, this came a little higher than my order block, came back down, didn't get any new lows, and came back up and retested and won. This is why all the orders came in, guys. The institutions are looking at this going, wow, there's an order block here. It's, again, only a yellow one, only a 15-minute one, not a 4-hour, right? But it beat that order block. Well, if this is typically where a lot of institutions were selling before, price came above it, so institutions are like, okay, we got to buy now. Where is it buying? Immediately above that order block, price shoots up. Where is the price heading? If I get in this trade, this is where I'm setting my take profit. 10.88 risk-reward ratio. So again, let's see what happens. And now at this point, I know I got my trusty blue line here. I see a bunch of lines right here. Think of like a spiky haircut, right? This price right here, a lot of people are buying. Nobody's selling underneath it, right? A lot of people are buying up at that price, and hopefully this continues to go up. But this is where my stop loss is right now. I am at a plus 5 on that trade. Oh, got stopped out right there. But I'll take an easy 5K trade. You know what's crazy, though? Did it break this yellow line? No. We're still looking for buys. Is the cloud green or red? It's green. We're still looking for buys. So I'm going to move my fake sell. And again, I don't want to belabor the training here because we're definitely doing more than an overview now. But so now what are my confluences? If I come back up, I want it to cross the momentum line, my royal bloodline here. So this green and red line that's curved right here, kind of like a moving average kind of a thing. It's closing solid. Could I get in here? Maybe, but based upon my main training, this price is still the same as where these wicks were before. This could shoot right back down. I wouldn't get in it. If this beats this price here, probably get back in. There it is. And now I'd ride this back up. So this stinks. We got out here. If we'd stayed in it, you know, if this crazy wick didn't happen, you know, it would have been a pain. But anyway, I'm still setting my stop. My take profit for there. Let's see what happens. Boom, take profit. I'm out. It's another $4 made. So now let's see this. Now, if it hits this order block, is it going to continue up or is it going to bounce all the way back down off of it? Right? Looks like it might be still heading back up. Or no new lows, right? So again, this is the watching the price action and watching those buyers and sellers kind of fight. I'm typically not entering in trades around the order block until after a bounce in either direction. If we pass through, hey, great. I'll do a continuation trade and take another buy. But hitting a red 4-hour order block, I'm generally getting ready to potentially do a sell here. But we got to definitely break this low as far as that goes. So anyway, this is just some of my thought processes. I know I went in probably a lot deeper here, but you basically saw me in the span of like, what is this, 1 trading session, 2 trading sessions, something like that, make a bunch of money. You know, +8, +5, +4. Not too shabby for the day, right? So hope you guys enjoyed this. Remember, like, subscribe. Make sure you click the button down in the description, get access to the members area so you can see all the checklists and all the guides, see me do trading like this live, and get inspired, man. That's what it's all about. So love you all. See you guys in the next video.